Is the dollar doomed in December is what we're looking at today. If we go over to the next slide, the main narrative around this time of year is, as you know, the Santa Claus rally, U.S. equities. Will they have another monster December as we enter, like the spending cycle for U.S. consumers and whatnot? But let's flip to the next slide, if possible. Is the same true for the U.S. dollar? And this falls this year at a particularly crucial impetus right now. We're at monthly lows in the U.S. dollar against a handful of major pairs. A lot of charts looking similar. We are back at lows dating back to, in this euro dollar market that you're looking at, the end of October. But the last time we really traded through these levels in this euro-dollar market is around 116.50, was mid-October, and this chart looks the same as a British pound U.S. dollar, an Australian dollar U.S. dollar, not so much the U.S. dollar Japanese yen, but that one also coming off of highs has a ton of its own storylines and narratives dictating it. But right now, in the macro environment where we placed, we're looking at a December rate cut. Those odds oscillated for the better part of a month and a half, 2 months when the government was shut down. Now it looks like, according to futures traders, that's all but locked in a week's time. And this sets up for, directional traders an interesting inflection point of, will these ranges continue, or do we have the chance to break out? Further dollar weakness would be a breakout from these recent trends. And what does history have to say about the dollar December? So I crunched some numbers, just some high-level stats on the next slide, just covering the dollar's performance since 2003. That's all the data I had. I thought about tightening it up a little bit, just recent years, but wanted to get, since we're only looking at 1 month at a time, as much data as I could get in there. And we see the currencies versus the U.S. dollar across the board doesn't look great for the U.S. dollar in December, led by those European currencies, that Swiss franc and the euro market. The top average gainers in the month of December on average. And then up years is just taking, were these currencies positive against the dollar in a given year? Or did they fall against the dollar outperforming? And we see a lot of 5s and 6s in the 10s place, meaning those currencies are outperforming the U.S. dollar more years than not. Only the British pound and the Australian dollar looking at 50-50, or the dollar gaining more years than not. And then I also roped in what the average monthly change is. This was just, the average magnitude, taking direction out of it. And you see that a pretty interesting story. Swiss franc leading the charge there. Japanese yen not far behind. Australian dollar not far behind. But if you're looking for low volatility, that U.S. dollar Canadian dollar pair leading the way in terms of muted moves in December. And there's a bit more nuance to this behind the scenes. This taking in, as you know, 22 years of data. A lot of the biggest magnitude moves came around that 2008, 2009 crash. And so perhaps these average statistics are a bit skewed. We haven't seen the greatest magnitude moves in about the past 10 years. So that speaks to, I also ran where volatility stacks December versus other months. Nothing exciting to report there. December not an outperformer in terms of major moves as it relates to all other months. It was middle of the pack, 7th out of the 12 months there. And so what this tells me is, as an active trader, there's a lot of things to be looking for if history is to repeat itself. Going over to the major takeaways, unless you have something that catches your eye here.
Yeah, for sure. I mean, you can't throw numbers up and not have me make a story out of it.
Please.
This is how we do. Up years. When I see this, I see the euro and the Swiss franc of are the highs there as far as like up years, and after
pretty starkly.
that, it looks like
Two out of
pretty
3 years.
starkly, and yeah, basically, right. And then the Canadian dollar and the Japanese yen are second, if you will. But when you say average gain or loss, it's just kind of, I mean, it totally makes sense, I would say. I mean, well, it's interesting, though. Average gain or loss, Swiss franc 1.5% first, and the euro almost 1% and they're the highest up years
So there, there you have.
over the last 22 years.
You also have the nuance of the euro and the Swiss franc being pegged in those early years to each other. A little bit of shakeout there as a result, but as we know,
they were. I don't think I knew that.
Yeah, and 2011 or 2015, a lot of that changed, and the relationship changed. And now, as you know, still highly correlated pairs or currencies, but still free movers. And so it is worth noting. But yeah, I think it's really interesting. The 2 out of 3 years for those European currencies, British pound not playing along though, as we've seen recently, a few more instances of idiosyncratic risk to the UK. That euro pound market looking more and more interesting over time, and the British pound dollar not moving in tandem with the euro dollar market always. So yeah, that's what I thought was interesting over the past 23 years. You know, this makes a little sense with the prevalence of the Santa Claus rally in U.S. equities, as we see over the long term a historic negative correlation between U.S. stocks and the U.S. dollar. And this data confirming that narrative slightly, but not to the degree that we see the consistency of that Santa Claus rally. So a couple key takeaways on the next slide to discuss. We touched on most of these. Dollar weakness leading the charge with those European currencies led by the Swiss franc on an average percentage basis, but looking to that British pound for possible divergence there. And even if you want to take the US dollar out of it completely, maybe look to that euro pound market for some interesting divergence. If perhaps December is, if we ran this for the British pound against all currencies, maybe this month is a unique month historically for divergence against its peers. I'll have to look into it, but you also get, you know, the story, the narrative behind this is you have these year-end flows as well, right? And so perhaps, you know, December is a month where the move over the year is perhaps just extended a little bit as companies, banks, even countries have to recalibrate their books. Doing so, I'm sure, in a sophisticated manner, but deadlines are deadlines on a yearly basis. And all those players in the spot FX markets, so all affecting these moves and not looking like the most volatile year. So if these ranges, volatile time of the year, if these ranges hold up, if you're talking taking profits, stop losses, perhaps the most crazy moves shouldn't be priced into your trading mentality. But a lot of active takeaways this year. If I'm setting this historic study against the backdrop right now, we're at a key inflection point where, you know, if we get confirmation breaking through some of these ranges to the US dollar downside, maybe that spells some further dollar weakness. Whereas, you know, if we get rejected from those levels, then you could say, okay, even though history's right in certain pairs, 2 out of 3 years, this might be the year where the move for the U.S. rate cut was priced in before December started. And this is one of those unique years where the U.S. dollar either comes out unchanged or a slight gain. So both directions in play, but I'm looking at those key price levels first and foremost for, you know, where traders are grouping, like you say, those kind of fear and greed price levels if we trade through them or get rejected firmly off them.